Hi, I'm David Daughtrey from Copperwynd Financial. Just wanted to follow up on a discussion we had a few weeks ago on the repo market, the repurchase agreement market, and treasury bills. And that mainly what that had done is that it pushed the market to all-time highs since about September of last year, because the Fed had printed about $400 billion out of thin air to repurchase these treasury bills. That has slowed some since the first of the year. It's still up, but the growth, probably in the last week, it's dropped by about $20 billion. What has replaced it, though, is about a $20 billion increase in the direct purchase of treasury bills out in the open market. So you are continuing to see some increase in what the Federal Reserve is doing as far as providing liquidity and pushing it into the system. But one of the things that we're seeing right now is we are seeing this coronavirus scare in China that is really impacting the market to the effect of 450-point drop in the Dow today. Now, is that the start of something a lot larger? Who knows? I mean, I think we'll have to wait and see. But the market was clearly overvalued, hitting all-time highs. The valuation metrics, where you're looking at PE ratios or price to cash flow, all of those things were very overvalued. So it was really just waiting for some trigger that would cause a risk off. And it looks like that's what this is occurring right now. Whether the market bounces right back as it has in the past, I think that depends upon what happens with the coronavirus and the increase in a lot of the infections that we're seeing, now even here in the US. In fact, we're in Scottsdale, Arizona, and there was one that was reported in Tempe, Arizona. So it's getting quite close to home. Now, you look and say, well, why is that such a big deal? Well, if you look at it, Foxconn and Samsung and J&J, Foxconn is one of the big producers, manufacturers of the Apple iPhone for Apple. They have operations, factories in the Wuhan. And what's occurring there is they've shut them down. The government has shut down these factories to stop the spread of the virus. Now, if they do that for a week, not a big deal. If it goes on for weeks and weeks, it will have an impact in China's GDP, and therefore it will impact global GDP and come to the US. So that's the concern right now. Like I said, the actual impact right now, not huge, but also the perception in the market. The market was very optimistic. Does this put a damper on that? And then we start looking and saying, oh, it's more pessimistic. It wouldn't take much for the market to sell off, 10 to 15% if all of a sudden a lot of investors get pessimistic. Now, what's occurring over there is, they've quarantined 40 million people. You think about that. If you tried in the US and say, we're going to quarantine and not let people move and travel all of California, it'd be a huge thing, and that's what you're seeing. So we'll continue to watch it. I think, what you're going to see in the next few days, if this continues, you're going to see your 401k go down. You're going to see your IRA or your individual accounts go down. Now, the flip side of that, if you're in bonds, you're a happy camper, because treasury bonds went up significantly today, or if you're in gold also, because those are the safe havens. People go to those when they want risk off in the stock market. So we're seeing those, risk-free or low-risk assets going up as the higher risk ones are coming down. So we're monitoring this. I think you need to pay attention to it because it could have some bigger impacts later on. Thank you very much.